The Fed's next move is in Jackson Hole, Wyoming, when the chairman gets the committee together and has a big conversation about the future. The elephant in the room is the political pressure coming from the other side of Washington, D.C., more specifically coming from the White House. This was the latest this morning. We've been tracking this story. The director of the Federal Housing Finance Agency, Bill Pulte, is urging the Attorney General Pam Bondi to investigate the Federal Reserve Governor Lisa Cook over a pair of mortgages. The president taking that story, putting it out on social media just moments ago and writing this, that Cook must resign now.
This feels somewhat predictable in some ways because there has been a focus of reshaping the Federal Reserve. Putting some of the allegations aside, it just highlights how fraught this meeting is in Jackson Hole at a time where there is so much political focus on reshaping the way that they set monetary policy.
Framework review. How valuable is this framework review when we've got a lame-duck Fed chair and an administration pushing to change the Federal Reserve as an institution from the bottom up?
Yeah, people will be asking that question, and how much does that threat kind of loom large over some of the way that these things are shifted? Look, a real question here, and this is something that the market is looking for, is how much credibility will whoever comes into the Fed continue to lend to the idea of independence, and how much will global leaders on central banks try to edify that message?
Let's stay on this breaking news and bring in our next guest. So let's cross over to Seema Shah of Principal Asset Management. Seema, welcome to the programme. Just want to build on this story just with you quickly. How do you view these developments and how much pressure is on this institution going into Jackson Hole and their annual get-together?
Hi, John. Yeah, I mean, look, that pressure is clearly building day by day. It's one of the concerns that we've had in the last couple of months is that you're going to see more and more of a politicization as you have more and more people joining the Fed who would be more aligned with this idea that, you know, come whatever happens to the economic data, there should be rate cuts. So it is concerning, and we are getting close to a numbers game. You know, we've already seen Steve Myron talking about 50 basis point cut. We've already got a number of Fed committee members talking about the 50 basis point cut potentially as a way, you know, to advertise their availability to be the next Fed chair. This is getting to a numbers game. So I don't think, you know, typically in a normal time, we wouldn't put too much emphasis on this latest news, but I think that this is a little bit more meaningful than what you would traditionally see.
Is it having an effect? I think that's the ultimate question for a lot of us in markets. When you look at market-based expectations of inflation, Seema, do you see them becoming unanchored in any way, shape or form off the back of these developments?
I don't think they're entirely becoming unanchored, but you are seeing this creep higher. So much is going to really depend on what the Fed chooses to do at the next meeting. A 25 basis point cut seems absolutely set in. If you're starting to veer to a 50 basis point cut, then I think you're going to get into slightly dangerous territory where people start to say, well, look, what in the economic fundamentals really justify that emergency size cut? And once you get to that point, then there's going to be question marks about inflation expectations. You get a push up in terms of term premium. Then you start to get to a point where actually the rate cut begins to backfire, and you could see the upward movement in 10-year Treasury yields and further up on the long end.